Welcome. It's great to be here. As Zoe said, my name is Sally Uren. I am the Chief Executive of Forum for the Future, and delighted to welcome my panellists this morning. What we're going to do in the next 55 minutes or so apologies in advance, your coffee break is going to be slightly later, but it's going to be worth it. We want to do four things, really. We want to explore what we mean by net positive, to highlight examples of where businesses and other organisations are really trying to deliver net positive ambitions, to talk a little about how we overcome some of the barriers that we think are out there that are constraining our ambition in these areas, and critically, just to dwell on what needs to happen next to get more and more organisations, businesses and others to adopt and deliver net positive ambitions. And so to do that, I will introduce my panellists. I have Abyd Karmali here, who is the Managing Director of Bank of America Merrill Lynch. David Nussbaum, who is the Chief Executive of WWF UK. Jeff Seabright, who is the Chief Sustainability Officer of Unilever. And then right at the end, hello Mark, is Mark Kenber, who is the Chief Executive of the Climate Group. So really good set of perspectives here for you this morning. But before I pose my first question, I just would like to draw your attention to a report that Forum, WWF UK and the Climate Group published at the end of April this year, which is on your iPads. That's so clever. So there's no ignoring it. On your iPads is a report which we try to define what we mean by net positive and also talk about the business benefits of being net positive. And this report was the result of 12 months' work between the three convening NGOs, plus 7 leading businesses, BT, IKEA, Capgemini, Kingfisher, SKF, the Crown Estates, Coca-Cola Enterprises, who between us all were working on something approaching a net positive ambition, although they might not call it like that. So we brought the businesses together to try and define what we mean by being net positive and to talk about the business benefits. So I really would urge you to take a look at the report. It's very short. There's lots of nice pictures. It's not too onerous to work your way through. And what I also wanted to mention is that this group of businesses have committed to stay together to move into phase 2 of this working group, where we will be focusing on 2 things. How do you measure a net positive ambition? How do you show that you actually have put something back? And critically, how do you communicate net positive to important groups such as consumers and critically investors? So that's just a bit of backdrop in terms of the work that's been going on around net positive. And we've also recruited additional members to the group, and they include TUI Travel, but also include the Manchester Fire Brigade, so a non-business that is committed to be net positive. So an increasing diverse array of organisations that are joining this journey to articulate but critically deliver what we mean by net positive. So that's just by way of introduction. So now I only have 3 questions that I'm going to pose to each of the panellists, and they are on strict instructions to be pithy, to the point, 2 minutes each in terms of sharing their experiences, because what I would really like to do is to throw the questions open to the audience. And also I have this innovation of the pigeonhole where I'll be able to see the questions you think are most important. So I will be turning to this to look at the questions that have got lots of votes, which I also will put to the panellists. So question number 1, and we'll just go down the line in a sort of slightly linear, non-systemic fashion, but we can mix it up later. In your view, what is the most important feature of a net positive approach? And can you give me an example of a business or another organisation that is demonstrating a net positive approach? And for Jeff and for Abyd in particular, you might want to reflect on your own organisations, because clearly you're doing some very interesting work in this regard. So what's the most important feature of a net positive approach? Give me an example, or 2 if you have one. Abyd.
Thanks, Sally, and thanks for the invitation to be here. You know, for us in the financial sector, the feature which is most critical is really the ability to achieve financial returns while delivering positive externalities. And that, of course, is really challenging to do for us because we have such a diverse array of financial activities. But I think, so when we measure what it is that we're doing in the financial sector, we need to think about not just our own direct activities, but the whole array of activities that we're financing through relationships with corporates, with institutional investors, and even on the retail side, which for us means the US primarily. And so there are three things that we've tried to do. Number one is commit financial capital to signal to all of our businesses that this is what we intend to do. And in our case, we made a cumulative $70 billion commitment to try to mobilize for the low-carbon economy. And that is rippling through all the way to the wealth management business, for example, where we have created a new platform for investors that are increasingly concerned about things like climate change. The second piece of it is committing to financial innovation. And in some cases, that means trying to create new markets. And I'm going to quote something which the chair of COP20 also cited, which is the green bond market. Over the past few years, we've tried to act as architect, issuer, and underwriter. And I would say that that's had some success. We've created some principles to underpin the fantastic growth in the green bond market. We've issued our own bond, green bond, the first US corporate to do so, the first financial institution to do so. And of course, we've been involved in many of the underwriting activities that have seen the green bond market go from, last year roughly $11 billion to this year we're expected to see around $45 billion by the end of the year. And the third piece, to close on this one, is really about new partnerships and creativity with working with strange bedfellows, as we were talking about in the room over here. And with us, what we've done is we've co-chaired something called Sustainable Energy for All Finance, which has brought us into close contact with all of those other partners who wish to see significant growth in renewables and efficiency and energy access. And that led to, most recently, in fact, last week, New York, the UNSG Summit, we launched something new called the Catalytic Finance Initiative, which basically says, look, we know some of this is really challenging. What we need to do is find ways, public and private finance, to work together to de-risk some of these challenging opportunities so that the risk return changes for investors.
Great, thank you very much. David, for you, what's the most important feature of a net positive approach?
Thanks, Sally. I think the key thing here is that for many businesses, after some years of having a go at this bit of their business, doing something on that bit of their business, communicating about some of what they're doing to some of their customers, what Net Positive does is stimulates businesses to go beyond a purely incremental approach of doing a little bit here, a little bit there, a little bit somewhere else. And that means that you get into challenges of innovation. So I think Net Positive can be a significant source of innovation for a business. And if I can say so, that goes some way to answering the question which at the moment has the most votes about what's the actual business value beyond reputation, that embracing this agenda stimulates things that wouldn't otherwise happen in the organisation. And as we know, a lot of added value comes from innovation and connecting different parts of the business. So that's one of the key things, I think, that Net Positive encourages and stimulates. To give a couple of examples, WWF works with Marks & Spencer on their seafood sourcing, where they've been trying to look with us at how do they ensure that the seafood they're providing overall, that's resulting in a net positive, whether they use that particular vocabulary or not, a consequence for marine life. Another more interesting example, perhaps, because it goes much wider and goes to the heart of their business, is work we've been doing with SAB Miller on water stewardship. Water is a pretty key, if not the key, ingredient in beer. Well, arguably it's the second most important ingredient in the beer. And so if you're going to have sustainable supplies of water, how can you approach this? And one is, you try and make sure it's all okay and so on. No, they've tried to look at a much more holistic approach. Water stewardship is what they've called it. And I remember when I was seeing some of our work with them in Colombia a little while back, this involved them engaging with local communities to look at, well, how do we ensure that our impact on the natural water there is, mainly in rivers there, has a net positive impact, not only for us, but for local communities? That goes way beyond the traditional sort of, manage the pollution you're putting into the river as a result of your operations. So.
Great, thank you very much. Jeff.
So I think it's first important to note that the net positive is important because it really is grounded, I think, in the logic of what we have to do. If you look at if you look at the challenges that we face around inclusive growth and social justice, if you think about planetary limits, simply making less of a mess as we continue to grow is not a solution, not a viable solution. So we really do have to focus on how do we create value as businesses, and to do so, in a sense, at a systems level, not as a one-off, as Abyd and David have said. Not just less bad, but more good. And I think it's important there to recognize that good and bad are actually values. And so with respect to the environment, it's pretty straightforward, or reasonably straightforward. So to take the water example that David just talked about, measuring and balancing water use and making sure that as a beer or Coca-Cola, where I used to work, giving back to the communities in a safe, reliable way, more water than you actually extract through rainwater harvesting and other mechanisms to give back, that can be measured down to the liter. Less clear is the social side. And so I think that in terms of net positive is a challenge, but an important opportunity. As many of you know, at Unilever, the Sustainable Living Plan is really about decoupling our growth from negative environmental impacts and creating positive social impacts. Two quick examples that I would just touch on. Lifebuoy, we have a very extensive set of partnerships around the world to increase access and awareness around the benefits of hand washing, which can reduce by nearly half the diarrheal disease that affects children under the age of 5, and about 2 million children under the age of 5 every year die from diarrhea and pneumonia, both preventable with proper hygiene. We've taken that awareness and training and access to 186 million kids in 16 countries. So don't know exactly how you would quantify the benefit of that, but it's certainly saving lives. We also have made a new commitment to empower 5 million women entrepreneurs within our value chain by 2020. And as every development professional knows, empowering girls and women is an absolutely vital investment in sustainable human development, because they tend to give back much more to their families and communities. So those are two examples I would touch on from the sort of the social side, and we can talk more about the environmental piece later. So, thanks, Sally.
Thank you very much. And for those that are eagle-eyed amongst you, you'll have noticed we have a new panelist. Just very quite like to welcome Heru, who is the head of the Indonesian National Red Agency. Unfortunately, it was a little late joining us this morning, but I'm very pleased to welcome you to the panel. And I'll come to you and pose my first question to you in a moment. Thank you for being here.
Give me a breathing time.
Mark.
Yes. Morning, everybody. I think to take as a starting point, most companies, even some that you might be somewhat sceptical about, would argue that they provide a net benefit to society. Otherwise, people wouldn't buy their products, and it wouldn't be a consumer surplus that would exist. I think what net positive is looking at is how do you go beyond what would be the ring-fenced, so to speak, benefit that any organisation, business or otherwise, provides to society. And when we look at work we've done with Forum, with WWF UK on this, I think what I've observed, and this is purely a personal observation, there are two features of the approaches to net positive that we've seen. One you might call an insurance approach, and people have already mentioned reputation. Companies do not want to be accused or judged for having caused social or environmental damage, and net positive is part of an approach to managing that. There's also insurance against disruptions to future supply chains, and I know that many of the companies we've worked with have been looking at maintaining the environment or the resource base that they draw from because that is absolutely crucial to their ability to function 5, 10, 15, 20 years in the future. So another example of perhaps enlightened self-interest, there is anticipation of policy. What's interesting, although we've been working with broadly a European-based group of companies, there are a number of US organizations that are looking at a net positive or similar approach in my field in climate change in anticipation, they don't know when, of some kind of climate policy, whether it be a carbon pricing or renewables requirement or whatever it may be coming into place. And then, of course, market opportunities, which have to do with reputation on the one hand, but also looking for products that can be, if not formally labelled, associated with some social or environmental good. That's insurance not in a negative sense, but probably both in safeguarding against future problems, but also ensuring a positive future. The second part, which is perhaps more exciting, is because net positive requires, from the principles you'll see in the report, companies to take an integrated or systemic approach. This drives what other panelists have already mentioned, which is innovation, that rather than ploughing the several single furrows in silos, companies, the people who work for them, have to look across different areas of their businesses and perhaps across different whole sectors to look for where those opportunities to become net positive are. Doesn't work if you just look at individual bits of the business. And that, I think, from the companies we've been working, we've heard has driven both internal and external partnerships that companies wouldn't have expected or even anticipated in the past. Looking at from the climate change perspective, two of the companies which I think are worth mentioning because they illustrate two different approaches to net positive are IKEA and BT. IKEA, amongst many things that they've done, have committed to produce more renewable energy than they consume. So on the surface, that is obviously a net positive approach. They're putting back more than they take out of the environment. But you also can see that as an illustration of some of the reasons or features that I mentioned before. IKEA have, since taking that approach, have now found themselves able to open a market selling solar panels and other renewable energy to their customers. And that has enabled them to safeguard their own future energy. They do it because it reduces the hedging cost of hedging against price volatility for energy in the future, and they've also done the calculation that it's cheaper for them to use renewables over the medium and long term, but has created a market opportunity as well. BT is another example. They have taken very much a consumer-focused approach, where they've committed to reducing the emissions of their customers by 3 times their own footprint. Their own carbon footprint is around 5 million tonnes, and they've made a commitment to reduce their customers' footprints by 15 million tonnes by providing energy-efficient, clean technologies and services that their customers can use. So again, another example of how a company's had to look beyond their own boundaries, has looked at their customers, and obviously see this as a business benefit, not only for them customers, but also for themselves.
Great, thank you, Mark. Just before I move to Pat Heru, just reflecting a question that's come from the audience that's got the most votes, 7. So come on, get interacting. And that's that question about beyond reputation, what is the actual business value to go further than 0? And I'm interested, Jeff, actually, as a sort of extension of your example, Lifebuoy, so and so forth. For you and for Unilever, what is that business case for pursuing these big, ambitious programs like the Lifebuoy program?
Well, I mean, I think it starts with the point of view around sort of where the mega trends are leading and where business and society sits and where we need to be navigating to be ahead of the curve. In the case of Lifebuoy, it's fairly binary. It's pretty straightforward. We sell soap. Soap saves lives. The more we can, get out and make people aware, the more lives can be saved, and hopefully the more successful our soap business will be. But I think it's also about really understanding the range of opportunities, not just risks. I mean, there are a ton of risks out there: regulatory risk, resource risk, social license to operate risk. Those are all very real, but there are also huge opportunities for innovation. And you really don't understand where the opportunities in the marketplace will lie until you get engaged and start exploring them and activating around them, and that creates all sorts of new opportunities.
Okay. I mean, certainly in the work that we do at Forum in partnership with lots of leading organisations, yourselves included, the business case for us is just really fundamental, because this is about how you secure social, natural assets and build them back up so that you create not just a sustainable business, but a sustainable system around you. And in some ways, the business case is as straightforward as it possibly could be. So welcome, Pak Heru, very pleased to meet you here this morning. The question that the panellists have been answering is, what for them is the most important feature of a net positive approach? And they've been giving examples of organisations that they think are making steps in this direction. So if I may pose that question to yourself, which is from your perspectives in terms of head of the RED initiative within Indonesia, what for you is the most important feature of a net positive approach, and where do you see good examples of this happening?
Thank you, and good morning everybody. So sorry, I overrated the Jakarta traffic. So I thought the traffic in Jakarta is so bad, no other city can match that. So I rest my case there. Okay, the question is very interesting. I would like to approach that from three perspectives. I was part of the post-2015 development agenda high-level panel team of Indonesia, and we see that sustainable development is something that is unavoidable and something that we need to address very specifically. The second angle that I'm going to touch on is basically from the business case perspective, and the third is from generally accepted accounting principles, being in this hall. Now, from the perspective of business case, question always comes, for who is this business case applied? Is that for businesses? Is that for government? Is that for the people? And then I will say that when you're talking about the net positive, the thinking is actually about the business case for enterprise Earth, because that is the enterprise. The enterprise that we are talking about is Earth. So you're talking about the business case for enterprise Earth. Then the issue is not only about money, it's not only about commodity, it's not only about people, but it's about everything. And that is taking the chance, taking the statement that, well, it is not about the Earth itself. The Earth will survive. But if we are not doing the things right, then it is us that is going to perish. It's not about the Earth itself, but it's about our connections with the Earth. So when I'm talking about enterprise Earth, then that will be the perspective that I'm trying to address here. In Indonesia, and from my perspective, when you're talking about enterprise Earth, when you're talking about post-2015 development agenda, the key word that is coming out from the net positive is basically partnership. If we are not doing this in a partnership way, then there is no chance. There is no chance. Climate change has given us the picture like a big iceberg in front of our fleet of ships going there. And we need to make a tangential turn. Every one of us, government, business, NGOs, local communities, indigenous people, we have to make that turn. So if without partnership and each of us is doing our own, with the due respect to Unilever with 2 billion constituent or customer for that matter, it's a big company, but we cannot do it alone. Not Unilever, not government of Indonesia, not the government of the United States or United Kingdom, but this is something that we need to go together with. Now, if you're talking about doing that together, then we need to communicate to each other what we have, what we can do, what innovations that the corporations can do and the government can make use of, and those kind of things. So the way that I see it, the most pertinent, the most important features of the net positive is basically the partnership. And one of the bigger reasons of that is that getting to zero is very difficult because we are so much negative today. And we are getting to zero is already very difficult, making it positive is even more difficult because it's just like swimming in the sea. You get over that surface and move into a different atmosphere from a hydrosphere. So that is the challenge that I'm seeing here. We have to do it together.
Thank you very much. So there's been a slight change in the format for this morning. It's an ever-moving feast here. The dynamism up here is astonishing. We are going to wrap this panel session up at 30 minutes past the hour, and then we're going to ask Pak Heru to say a few words. So what I'm going to do, gentlemen, if that's okay, is not ask you all of the questions, but to select a couple that we had discussed about earlier, and then we can go to the pigeonhole and go to the audience if that's all right. So if I may then pose this next question to Abyd and to Mark, and that is the question around how do you avoid slipping back into incremental change? So we've heard that net positive is about ambition, it's about seeking to deliver transformative change. And in order to do that, you need to be brave, you need to be courageous, you need to innovate. You have to do a lot of things that are quite hard, that are way above business as usual. So in your two views, what do we need to avoid slipping back into incremental change?
Sure. Well, I think there's four things that come to mind. I know that's quite a few. The first is short-term thinking, and I'll pick up on each of these in a second. The second is lack of metrics. The third is government support. In our case in particular, the risk-return environment for low-carbon investment needs to be improved. And then the fourth is more disclosure and leading to naming and shaming. So on the short-term thinking, how we try to address this, and I'm glad Pak Heru mentioned the post-2015 agenda. We've been leveraging the relationship we've had with Sustainable Energy for All to try to work with that coalition on making sure that energy access becomes part of the Millennium Development Goals. And I think we're going to succeed on that basis. That's important because it keeps it on the agenda as something for the long term. In our own house, the way we address the long-term thinking is through thematic research and, in fact, even equity research. So we have some fantastic individuals who pump out this analysis on topics which are really macro trends to try to stimulate that sort of discussion with our clients on the investor side, with clients on the corporate side, and even on the retail side. And that seems to be having some results in that we see more demand for the kind of more sustainable financial products that, that we're trying to create. On the metrics, this is really challenging because we're all involved in many, in very diverse businesses. But I think partnership again is fundamental. So we work with one of the big four on trying to develop metrics for measuring the impact of our $70 billion low carbon investment commitment. We work with WRI on measuring the CO2 intensity of our entire lending portfolio. And there's a coalition within UNEP FI that we're working with on that as well. And then, just to say that we have been the only US financial reporting on the CO2 intensity of our energy lending portfolio. So, there are lessons that we're trying to learn from actions we've taken to then feed into some of these newer ones. On the government support, last week saw a really interesting group of coalitions come together to ask for carbon pricing, to ask for repealing fossil fuel subsidies. Those are two pieces to the puzzle. The third one is a new partnership that we're involved in called the Global Innovation Lab on Climate Finance. And that's basically looking for new ways, new instruments that public finance can deploy that will then have the impact of levering in more private capital. And we think that's a really important initiative that I think we'll hear more about over the coming 12 months. And then the final one, the naming and shaming, again thinking about what happened last week, we had a very positive statement from a group of institutional investors. I think it was around 350 institutional investors representing $24 trillion of assets under management, calling for, I guess what we would say is a very net positive type agenda. But then the question is, what happens to the other, I think it's about $63 trillion of assets under management from those institutional investors? I would encourage all of us to do some of that naming and shaming because I think that's how we can shift the needle even more. Thank you.
Great, thank you very much, Abyd. So, Mark, in your view, what needs to happen to avoid us slipping back into incremental change?
I would start by just saying I think you're framing incremental change as something that everybody does, and to a certain extent you're right. I think the difference, what was said with net positive, is that there will be incremental shifts, but within a broader framework that gives us a sense of direction. assuming that every organisation is going to transform itself overnight or 1 year to the next is probably unrealistic. But what gives those increments, makes the increments bigger and makes them meaningful, is when they are set within a set of targets over the medium and long term that are published. And I think, picking up what Abyd said, you need to be brave. You need to put yourself out there, and then you risk being named and shamed if you fail to deliver. But that's something that gives impetus both internally and externally. So you need to set a long-term set of long-term targets around the areas you're going to be net positive in. That in turn requires, and I think something we've seen from every single one of the members of the Net Positive Working Group, is that net positive and their sustainability strategy has moved well beyond the CSR. It is something that they see as a real driver of business advantage and business benefit, both now and in the future. It's impossible to avoid being incremental if you're not seeing that as both something around cost and in profitability, creating market share and so on and so forth. Then from the externally, being part of a peer group, which helps you learn lessons, helps you share experiences. When it moves, and I think we've been successful so far in that by focusing on, and I think, as Abyd also alluded to, the focus on metrics is very important. When you can measure it, you can start judging your progress. There's a bit of healthy competition between the different companies, but they're also helping each other. So it's sort of collaborative competition, and I think that's probably one of the watchwords for not only Net Positive initiative, but other similar initiatives that we've seen in recent years, is that sense of both competition and collaboration to drive people forward. So I think it's having the targets which reflect you having put it at the heart of your business strategy, being transparent and public about them because you hold yourself to account, and then working with your peers who will not necessarily be in the same sector in this competitive collaboration.
Great, thank you very much. So if I may, I'd like to turn my next question to David and then to Jeff, which is, let's look to the future now. So there are a number of businesses that are making commitments that are definitely about doing less harm. They're about making positive impacts. They might not be called net positive, but that aspiration to rebuild stocks of natural capital, to rebuild societal capital is definitely there, and these organisations are taking a long-term view. So I think there's a groundswell of interest here. But what's in your view, David, and then Jeff, what needs to happen in both the short and longer term to really allow that groundswell to grow? So how do we get more organisations embracing this notion of being net positive and doing it and heading for that transformational change? So what do you think needs to happen, David, in the short and the longer term future to do that?
Well, I think in the short term, it's about collaboration between those businesses who see this vision and finding ways, firstly, in which they can collaborate. There may be opportunities where there's synergies between their businesses. But more importantly, probably, finding businesses within the same sector or in connected sectors where they can start to try to create a groundswell of support for this kind of standard, this kind of approach to sustainability in business. Now, if you then turn to the longer term question, which is, I think, the more interesting and challenging one, and I think there one of the key things is the frameworks that governments create for businesses to operate in. And crucial to that, therefore, is the advocacy role that businesses play. And that's where the short term and the long term connect. What we need to have is businesses who share this vision advocating to government for action to create a level playing field for competition to occur in, where there is a requirement on business to operate to higher standards, and where there are incentives or rewards for those that do so and have a net positive impact. That means not only businesses advocating individually, not only businesses coming together within their sectors to advocate to government about these issues, but it also means businesses taking very seriously the business associations and umbrellas that they are part of and the positions that those take. And it's been interesting to see one or two businesses pulling out of some associations because they say these associations are pursuing advocacy positions that are incompatible, fundamentally incompatible with what we stand for. An example of that is on climate change in the United States, for example, where there have been associations seeking to undermine policies that tackle climate change. And some businesses now starting to say, I'm sorry, we can't be part of those kind of associations. So, come together, advocate together, be public about that with government, and then reflect on the associations that you're part of and the advocacy positions that they take. That will change the framework within which business operates, and that's crucial for accelerating the move to net positive.
Great, thank you very much. If only we could do all of that, to hang on to maybe the fact that we can. Jeff, what do you think needs to happen?
Well, I think maybe just to build on what David has just said, and I think Pakaro also touched on this very much as well as Mark, but this notion of sort of radical collaboration, getting away from the one-offs where, a company does a project and takes a picture and puts it in their annual report, that is not going to get us where we need to go. And so this sort of more radical form of collaboration, pre-competitive collaboration, identifying key leverage points, where a sectoral approach can really make a difference, and I'll come back to an example of that, which can really create a tipping point, or in the form of the future terminology, Sally, the big shift, to transform the marketplace, right? To really change the terms of reference, to redefine business as usual. I think that's the real opportunity here. The example, and I have lived it, so it's near and dear to my heart, is the Consumer Goods Forum. So Unilever, Paul Pullman is co-chair of the sustainability pillar of the Consumer Goods Forum, which brings together the top retailers and consumer goods companies around the world, and put forward a commitment in 2010 to sustainably source the 4 key commodities that primarily drive tropical deforestation: palm oil, soy, beef, and timber. A tall order, and one that clearly, to the CGF members alone, understood that it could not be achieved alone. We needed government, NGOs, civil society in order to move that forward. Fast forward to last week in New York, the New York Declaration on Forests, which set an ambitious goal of halving the rate of deforestation by 2020 and halting natural forest loss by 2030, had something on the order of 30 governments, 20 subnational governments, 40 major companies, 40 or 50 NGOs, 20 or so indigenous peoples organizations coming together around this very important declaration. And I think that is, in a sense, a tipping point. That was something that was really quite unique and quite hopeful. What does that do? Well, on the one hand, I hope it will help drive, that this public-private collaboration will help drive political ambition, so that it will give the space to governments to actually get in and do the right kinds of things on the policy framework, because they see that there's a broad spectrum of support from civil society, business, and others. And I think that's absolutely critical. And it really is, in this space at least, a win-win, net positive opportunity. Jeremy Oppenheim is here with us. The new climate economy, the Calderon-chaired commission that was launched in New York 2 weeks ago, points to the tremendous opportunities to address climate change in terms of avoided deforestation while creating wealth and jobs through conversion of degraded lands, empowering smallholder farmers, tremendous opportunities. That's the prize that we need to be working towards. But to get there, we need not just the partnerships to help increase ambition, we need businesses, to David's point, getting out from the sort of the model of just say no, which is the traditional government affairs sort of position of business, no regulation, no tax, to identifying areas where we really do want to advocate for positive change, because we see it as in our interest and the interest of the communities that we serve to drive these agendas forward. So I think that's a shift that has to take place in the business community as well.
Great, thank you, Jeff. And you very happily have touched on the answers to some of these questions that are coming up from the audience. So there was a question which is quite popular, which poses, if economic system change is needed, is businesses' most important role in lobbying governments? I think you've heard here that it is a really important role that business has, and the shift that we need to see is not just saying no, but yes and actually businesses really taking the lead in helping governments shape a new policy. So I hope that goes some way to answering that question. And then Jeff, there's another popular question. If I just may ask you for 2 things that you think will practically encourage more of this radical collaboration. So the question is, what measures can we put in place to encourage collaboration between businesses that are moving towards net positivity? And you yourself talked about we need more of this. You talk about radical collaboration. 2 things that would help make that more likely from your experience from this Consumer Goods Forum in particular.
Well, I think there are 2 things. One is clearly leadership. It's an irreplaceable element in this equation. Without leadership, and I watched, as the Consumer Goods Forum board, the CEOs, struggled with the 2 resolutions that we passed in 2010 around phasing out of hydrofluorocarbons in refrigeration systems and sustainable sourcing of these tropical forest commodities. And it was touch and go. I mean, to be quite honest, no secrets. I mean, it was a leap of faith that we could do this. And it took a lot of stalwart leadership on the part of many CEOs, but there's safety in numbers. And so what I took away from that is to move the agenda forward. I think, this kind of sectoral approach of moving together to say, yes, this is big and bold, but we can do it. So let's step up and do it. So I think leadership, and that's easy to say, hard to do, but important. And it often only takes a handful to bring the rest along. So, creating that tipping point of leadership. The other piece is really sound analysis. Now, at CGF, I think we did a back-of-the-envelope calculation that forests and refrigeration were 2 areas within the consumer goods industry that would have significant payback, right? That if we changed the way in which we go about refrigeration, phasing out of HFCs, and change the markets for these soft commodities, that we can make an appreciable difference in the climate equation. But it wasn't, quite honestly, based on deep analysis. We now have some deep analysis, some roadmaps around what we need to do. The new climate economy report is a prime example of that can help begin to shape those corridors of action that hopefully we can then build leadership around to achieve that kind of systemic positive change that we need.
Great, thank you very much. Heru, we'll come to you in a moment because you're going to have the podium for 10 minutes at the very end. I just now want to check with the audience, because obviously you have your iPads and you might be voting for questions, but does anybody, have a problem with getting into their iPad and therefore have a brilliant question that they'd like to pose to these amazing gentlemen right here? I just want to check, because it might be that the iPads are working really well and are a great channel for all of your questions. I think that's probably what I'm seeing, but I didn't want you to go to your coffee break and thought she never came to the audience. So did just want to check that. All right, very good. I'll return back to my iPad in that case, because there is a question here which, if I may, I will just quickly answer because the answer is in the report I referred you to earlier. So there's a question which says, does the idea of net rather than gross positive encourage thinking in terms of trade-offs, e.g. we're cutting down this forest, harming this community, but don't worry, we're doing good elsewhere? Really good and important question. You can imagine was the source of much discussion and debate in the Net Positive Working Group. Within the principles that we talk about that define a net positive approach, we say there are 2 non-negotiables, which are to these 2 points. There cannot be loss of irreplaceable biodiversity, so no, it isn't okay to replace some amazing piece of tropical rainforest with planted woodland. And also the second non-negotiable is there can be no mistreatment of individuals or communities. So within the principles, we've been very clear that there are non-negotiables, and we also say that actually to even begin to be serious about net positive, you have to be exhibiting best practice in accordance to all the nationally and internationally accepted guidelines, GRI, and so on and so forth. So that's a very quick answer to that question. And then we have another question which is a little harder and is actually the focus of the phase 2 of the Net Positive Working Group. And I'm just going to throw this to the panelists and see which of you, hopefully one of you, is willing to answer. And that is, how can businesses monitor, report, and verify net positivity? Who'd like to take that one?
I'll take a step from my previous role at Coca-Cola, which had set a goal of being net positive for water, giving back, as much and more water than it used globally, which was 320 billion liters. That was an easy statement to make, but the methodology for accounting for that devilishly complex. And so a group of NGOs, academicians, WWF was very involved, along with the Nature Conservancy, the University of Delft, other companies like Nestle, and did a multi-stakeholder kind of process over 2 years to define what a water methodology would really look like. Then published a peer-reviewed analysis and paper, which then Coca-Cola used to hold itself accountable towards that goal, which was then independently verified by a third party, in terms of the reporting and the analysis. So I think that is one small example of doing it right, because it can't be self-determined. You can't sort of say, well, I'm net positive by my own lights. Well, no, that's not quite right, right? So how do you bring people together to get some kind of consensus on how to do that, and then hold yourself accountable?
Great. Thank you very much, Jeff. And David and then Mark wanted to come in.
Yeah, thanks. Firstly, of course, you have to look at each individual element of the business and whether you're being net positive on forests or on water. Of course, the bigger challenge is to think, is the business as a whole being net positive? In one sense, as was said earlier, businesses might say, well, if we're not being net positive for humanity, people wouldn't be buying our product. Of course, the issue is externalities, that you may be being net positive, but in that respect, in terms of your customers, they're getting more than they're paying for, or getting value for what they're paying for, but you're having all kinds of negative effects elsewhere. So I think that's a much bigger challenge. One of the tools that we now have available for this, but it's in a very early stage, is integrated reporting. And that it starts looking at 6 different kinds of capital, including natural capital and human capital, and asks you to report on how much of that capital are you consuming and are you creating. And at a conceptual level, I think that's a pretty useful framework. Of course, once you get into it, it's pretty complicated, and there are lots of challenges in the measurement. But I think that it's as companies grapple with that and experiment with saying, well, we've measured this and we can report this, we're grappling with this, can we have help? And as we've said before, collaboration in this area is crucial, not only with other companies, but also with organizations which help with certification, with auditing, with professional review, and so on. So getting all those inputs. But thinking of some overarching framework, such as integrated reporting, I think is very helpful.
Great. Mark, very quickly.
I was going to pick up on I was going to say a similar thing to David. I think there are some bits which are very straightforward. You set yourself a very clear goal that you're going to put more water back than you take out, or generate more renewable energy than you use. On the surface, they're simple. As soon as you get into the detail, they're complicated. Then I was going to mention a similar approach that countries have used to try and re-estimate their national product, that it takes into account externalities. That's something that seemed to have a sort of big lease of life in the 1990s, disappeared, and now has come back again. I think something which hasn't been developed, and which maybe is a topic for discussion. When we look as an NGO at our impact, we can look at our specific objectives and our KPIs and so on and so forth. But more and more we've had to think about shared impact and leveraged impact, because if we just are successful in what we do, then it's nice and we can probably justify that to our funders. But actually, collectively, we're trying to achieve something much bigger. And it's not clear how we should measure that, but it's very important that we do learn how to. And I think there's a lesson there, or perhaps an analogy there for companies that are looking at net positive. The biggest impact is going to be beyond their specific control.
Great. Thank you all very much, and thank you, audience, for voting for the questions. There is a question that is third highest, but it's a massive question around responsibility that business leaders have for shaping consumer behaviour towards choices that are globally sustainable. So I think I will urge that we answer that question as we go through the rest of the day, because I think there's no quick and easy answer to that one. So I'm not ducking it honestly. I'm just very conscious that we need to give some time to Pat Heru to share some of his thoughts in a moment. So before I say thank you to the panellists and to give the floor to Pat Heru, I just wanted to try and summarise what you've heard. And for those of you that know me, will know that I've been sitting here trying to think of a mnemonic that spells net positive. And here it is. And it's, well, it's not really glory. But anyway, I hope that this is a useful summary of what we've been hearing. So, N is for new partnerships. We heard the need for new collaborations and so on very loudly. E is for engaged government. I think what's really interesting today is at least 3 of the people, 4, in fact all of you, I think we were in New York last week, are talking about the fact that there's a lot of dynamism in this space between business and government, and businesses much more willing to engage with government. And of course, we all know that engaged government is fundamental to delivering the big shift towards sustainability. So that's E for engaged government. T is transformative, of course, beyond incrementalism, both in terms of ambition and progress. P is for positive externalities, which is what Abyd talked about at the very beginning, and incorporating these externalities into your decision making. O is for opportunity for many things, but the 2 that really stuck with me were opportunity for radical collaboration. We know we need more collaboration in this pre-competitive space, and also an opportunity for aligned advocacy. Again, we talked about the fact that in the US in particular, some of big household names are pulling back from some trade associations because of ALEC is the name of the organisation, their stance on climate change. We need more aligned advocacy because that will help with the engaging governments piece. S is for systemic. Of course, I might have just added that in because I'm quite keen on a bit of systems thinking to deliver a big shift. I is for integration across business. Mark talked about that, but also integration across the wider economic system. And then more latterly, we heard about integrated reporting as a way of beginning to measure some of these net positive impacts. T is for targets, which are published and transparent. I is, of course, for innovation, financial innovation, business model innovation. We need a lot more innovation, full stop. V is for value creation, short, medium, and long term. And E is for Enterprise Earth. The endeavour here is to deliver Enterprise Earth, because then we will hopefully deliver a net positive future for everybody. So there you go, that's net positive.
Wow, great.
Hope you got all that. I'm now going to